Afternoon, traders, and welcome to another edition of Awesomecalls Trading.com. I am your host. I am AJ Trader. On a great Friday on May 24th, ahead of a 3-day weekend, I want to welcome you for just giving me a chance to talk to you for about 15 minutes, and then I'm out of here. It has been a wonderful trading day to experience. A lot of learning. Earnings came out today on quite a few stocks that we had on our list, and then we played an analyst call upgrade on Katos. HIB had earnings. Foot Locker we played on earnings. DXC was earnings. VSAT was earnings. Today was the theme was earnings, um, and really reading the report, how to read through the earnings report to understand how a stock was going to trade out. And I just spent the last 25 minutes, 30 minutes before I do these webinars explaining to the chat room as we're trading stocks. I want them to understand the complexity of trying to understand how to read through an earnings report to determine. Because a lot of times when I give these calls, you'll see a stock pop at the open. And I will tell you, stock's going to pop at the open and stop here and then come down. And I get a lot of compliments every day as to how did you know it would stop there? How did you know it would pop there? How did you know it would come down here? How did you know it would bottom curl here? How did you give it valuation? And you know, it's obviously it's 16 years of day trading and doing this for a living, and I live and breathe, earnings, especially earnings season. Um, but you really have to read the reports. And what I try to do is every day provide a little bit of tidbit information, a little secret sauce to each of the members in the room. So this way they can really kind of see where I'm coming from, why a stock's going to pop, stop, fade off. So I'm going to share with you Foot Locker. We'll start with Foot Locker today because I thought Foot Locker was a very good play for many people in the room, and a couple of people did some videos on it. So I was really happy with Foot Locker's call today. So I'll kind of give you that one. Foot Locker they missed on, they issued downside guidance. However, one of the, what do you call it? One of the analysts out there felt that the stock was worth a little bit, actually reiterated buy weakness at the buy the weakness for $75 price target. After reviewing the earnings report and doing my homework, I felt that the stock would probably come down to the 43 area, bottom curl, and go long. Now, if you wanted to start early on the stock, 45 you could start, and then but give it room to 43. I felt after reading the report, 43 was going to be the bottom of the stock, and then we were going to get a few points on it. What I loved about Foot Locker is the amount of shares and volume that goes in. Every time Foot Locker runs, they'll do about 10, 20 million shares on Foot Locker for the day. And you could tell the blocks, I mean, just the amount of blocks being bought up. I mean, you see these little blocks here? They're not little. I mean, this is 250,000 shares. These are funds buying the stock, 65,000 shares, 43,000 shares, 21,000 shares. 180,000 shares. These are huge blocks, and it's very liquid, so you can trade 1 to 2,000 shares on a market order and get within the penny or two of getting your money being taken care of. What I looked for this morning was simply a 43 bottom and then a curl back up to 45, and that's it. And I think the stock should settle around the $45 area. So I put that in pre-market notes to go long. You can take some at 45 right here, add on the dip to 43, have a 44 average, and make a point on the trade. And that was simply the trade I was looking for. Um, Again, when you look at this number and say, God damn it, you hit it at 43.04 within 4 cents. How, traders and subscribers not in the room and followers? It's simply the fact you need to understand how to read through an earnings report. And that's what I do. So it gives so what this does is it prevents a trader from going long the open and thinking the stock's going to go back to 50 to fill a gap, because it's not. You have to read the report, and this is what makes us so different from any other room. This is why 99.9% of the room is out there will not trade a Foot Locker, and especially on earnings, on gapping down. It's just not, it's too complex. And here, it's part of the routine. I'm going to give you another one that we did in the room, ADSS. ADXS had, I believe, mixed earnings, and they were reaffirming a lot of their inline guidance on ADSS. Stock was gapping down considerably. You could see it had closed at 169. In pre-market, it was sitting at 158. I told the chat room, go ahead and go long the open and I was looking for a pop at the open to 165 and then a short on the stock. And if you want to look, pre-market ADSK right here, ADS, this is gapping down 10. Go ahead and go long, look for a 165 pop at the open, and then short the stock. Hopefully we can get down to 155. Okay. So what that does is it allows a trader to take 100 shares at the open, or pre-market, wait for the pop at open, make 6 or 7 points, and then be done for the day. And if you want to look, here's your 158 entry, and it hit 165. So if you took 200 shares, as I'm writing it down at 158 right here, or you took the open 200 shares, you literally made $1,000 in, I believe, in 62 seconds. Okay. And that was the trade on ADS. And then it pulled. You could have shorted, or if you did not want to long it, just wait for the lower low to set in on the pullback, short it at 164 and snap it back down. The stock hit 158.57. Next stock that we did on the books was DXC. DXC is also a nice earnings report. I read the report. I made the decision that the stock would probably pop at the open towards 55. Why? Yesterday, when your earnings came out, it pretty unhalted and pretty much peaked at the 55 right there, and then it pulled. So what I did is I told the traders, watch for the pop again towards that 55 level, and then watch for the stock to come down around $52.25. I was very clear on where it would settle, and just this again, 16 years of trading, it told me that the stock would probably not gap fill all the way. I figured it'd probably give about 25 cents worth of room. And so what I told the traders to do was look for a pop at the open. All right, there's the 55 spot, and that the stock would come down to 52.25, and then bottom curl and go long on it for the rest of the day. Okay, and my goal is to get it back up to the 55 level. But before you do that, you've got to pop it first, and there's the 55, as I said, 54.59, and then pull it down. And I said we go to 52.25. Stock hit 52.26, and then long back up. And right now it's heading back up to 53, 50, $54. Okay, so that's DXC, ADS. Okay. All right, the next one that we did today was a company called Splunk. Now, Splunk, what happened on this one was this one did not impress investors on their earnings. Okay, and so this one got a little bit of exhausted. And I figured that shorts were going to want to cover this at the open and then sell it off. So I anticipated a small pop at the open. I wanted to gap fill it because after reading the report, it told me that the stock was going to sell off today. Now, I anticipated a 122 and under, but this stock had a mind of its own. It came all the way down to 115. So if you're on the short side and you had limited time, you could see my 122 call and under, it hit 120. There was no buyer at 122 anyway. So even if you tried to cover, you would probably get an extra 50 cents in the money. The key thing was setting the stock up for everyone in the chat room to really benefit from. So what I did is I told everyone in the room, okay, that Splunk was going to probably pop at the open, not probably, was going to shoot out of the gate. So if you read my notes right here, it says this will shoot out of the gate and it will go to 129. When it hits 129, start scaling in short. And then I want you to get about 7 or 8 points to the downside. So I'm assuring you're going to get a 7-point trade. So if you took 100 shares, you'd make $700 probably in a matter of 10 minutes. All right, but you got to wait for it to pop at the open. That's the key thing. Okay, so come over here, go right here, and there's the pop at the open. There's the 129. Scale in short. There's your first entry, 129. And now count. Here's 123 in 12 minutes. And then it came all the way down to, in approximately 19 minutes, it came down to 120. So you would have made 9 points on 200 shares or $1,800. If you took 100 shares, 12,000 buying power, you probably would have scored 6 or 7. You would have made $700 and you would have been done for the day. Okay. The next stock that we had on our list was I'm going to show you a very unusual stock that very few people would have. No, I'm going to show you VSAT. A lot of people did not play this today, but we did. Nice trade fire on Footlocker. Well done, sir. Okay, now VSAT had earnings. All right, so after reading the report, I figured VSAT would pop at the open to 97, and it would sell off towards the 90 area and bottom curl. All right, the stock they really beat. It was a thin stock. Thin means that it doesn't take much for the stock to pop and drop. All right, it's very thin. You could put in 500 shares and it'll move the stock up 30, 40 cents. All right, market makers don't have a lot of allocation, so the stock moves and has wide spreads. I kind of knew that, but I also knew that the stock was going to probably push. It was already gapping up 7, so I figured it would push to 97 area and then come down. So I was looking for the pop if you wanted to do that. If you couldn't get the shorts, at least get the money to the upside. And then I wanted to pull it to the downside to about 90. Well, the stock didn't come down to 90, but it did give a nice play on it. As you can tell, pre-market uh, stock was sitting right here. The bell rang. It was sitting at 94. I said it would go to 97 and then pull. It hit 97.31 and then yanked. But you could see it was a clear resistance at $94. It was not going to come down below that, and it still won't. So they're going to keep it above that all day today. Again, it's up thin, so I thought that I thought it was a really good quick trade for 2 or 3 points. Another trade that we did um, was Vive. I'm going to show you Vive. Now, Vive was actually a stupid analyst call. And I want you to see what a stupid analyst call. I don't do too many stupid ones because usually I just ignore them and laugh at them. Usually they come from Deutsche Bank or Credit Suisse sometimes. But this was just, I mean, just, this is just stupid. I mean, I'll show you the call, okay? And you'll agree with me how stupid it is. All right, here's the call. All right, so Morgan Stanley issues, right, an equal weight. But when you read through the report, okay, he says he cuts it to an equal weight. But look what he puts. I'm going to cut it, all right? His name is Stan over there. Stan, if you're listening, seriously, all right, I got issues with you. I want you to sit down with me, have lunch. You buy it, of course, and then I'll explain to you, you don't do this. Because all you're going to do is you're going to make people like us rich. So you keep coming out with stupid calls like this, I'm going to just do opposite of what you're saying, okay? So Stan decided that, hey, I'm going to downgrade to equal weight. So the stock's gapping down 2 points. I'm looking at this. Now, what's the problem? Read through the report. You got to read it. But look what he puts. I'm going to downgrade it. So I'm going to gap it down, right? Which is what he did, right? But then I'm going to increase the price target. What the fuck? I mean, so the stock's basically going to stay where it's at. So what does that tell me? The gap down is going to be bought right back up. That's it. Whatever the gap down is, if it's 137, 138, it's just going to go right back to 140 or more. And then it's going to just kind of grind out for the day. There's no reason for this upgrade or downgrade. This is just somebody trying to justify their paycheck. And I could see that. When I saw that, it was a joke. So what did I do? I come over here and I put up Vive and I said go long. Go along the gap. Right there. You don't believe me? Look what I wrote. Vive. Stupid. I even put the word stupid. All right? Okay, long the open. If it pulls to 137, add more. The stock's going back to 140 or more. That's it. That's your trade. Whenever you see the word stupid in our room, just trust me. Put a blindfold on, a bag over your head, black glasses, and just pull the trigger. Because it's a guaranteed trade. Whenever I put stupid, all right? Trust me, 16 years, I can go through and tell you what's stupid. You want to see the trade now? 138 long. It went all the way up in 90 seconds to $141.72. 100 shares, you made $300 in 12 seconds. That simple. All right. So 1, 2, 3, 4, 5, 6. I'll give you one more, and I'll call it a day and get out of here. I'm going to give you Katos. This was our number one pick today. Simple trade. I was short biased the whole way. This got a $24 price target on an analyst call, so the stock had gapped up. Whenever it gaps up thin on an analyst call, I just kind of look at it and just laugh. I'm like, really? The first thing you want to do before you long the stock to go back up, you have to short the stock. It's got a leg down, bottom curl, and then go long. And so what I did is I just simply, I'm sorry, Philip, you spilled up your orange juice. I'm sorry, I didn't mean to make you laugh, but it's true. Um, on certain trades, you could wear a sheet, 3 sheets and a blanket, and cover your eyes and just have somebody pull the trigger that says buy. Anyway, so anyway, on Katos, I just wanted to short the stock. Gap fill it down to 21, bottom curl, go long, back up to 22. Simple trade. I mean, this is a no-brainer. That's why I put it the number one pick. Short it, and if you look how I wrote it up, and the reason is the secret sauce on this one was the price target was only $24. So it wasn't going to do that much today. So I said it's going to pop towards 22, gap fill it down 1 point, downside. I want to short the pop, gap fill it, and bottom curl, and go long. Easiest trade in the world. Should be easy. I really made it clear to everyone. It's an easy trade. You don't have to worry about nothing. Just short it, gap fill it, bottom curl, go long. That's it. And you can see how it worked. All right. So I want to thank you for joining us this whole entire week, of being a part of the greatest chat room in the world. And we seriously are. There's really no one that does what we do on a daily basis, does the research, the analyst. I mean, this is a pro room. I mean, simply put, you could trade options in here. You could trade puts. You could trade equity. You could do whatever it is you want. I will answer your questions 24/7. You know, um, one thing I won't do is I don't work for free. You could see the amount of research and time that I put in to do this job, and I ain't gonna work for free for nobody. So don't ever ask me, hey, can I have a free day to see how good you are? You know what? No, I'm sorry. There's a value that I put on myself, and or as it is, I haven't raised prices. The room has been around 6 years, and I haven't raised prices in 5 years. So um, sometimes I think I should raise it to $3.49 a month and just have the limited amount of people in here, and I'd be fine with that. And other times I think I'll just keep it open and at the 197. Uh, I don't know. I just think that if you come in here, you have an opportunity to make thousands and thousands and thousands of dollars. And this is a pros room. And if you really want to make something of yourself and take yourself to the next level of trading, this is the room to do it. I could trade the Apples, the Nvidias, the Googles, the Amazons, the price lines, the bookings. I could do those all in my sleep. The charts are pretty much the same, but realistically, people in our room have anywhere from $5 to $2 million in their accounts. Some have 5 million that they trade with. And so I have to make sure that I keep the prices, $200, $300, $400 stocks that have range so you can buy size and just enjoy it that way. I can't give you a Google at $1,000 a share and expect you to trade it and make 10 points and make $10. That's not what we're about. And I'm not going to penny stock a pump or stock like that either. I don't do that. Anyway, thank you for coming. Um, this is just a wonderful room to be in, and I just want to give a shout out to the moderators in here: Dark Side, Fire, B Trade, Gianni, Palmer, Dave the Trader, and Raphael. It's been a joy trading with you. I love you all. You all bring something to the table. I think we all do. I bring something to you. You bring value to me, and together we bring value to the room and help the subscribers in the room to really benefit from our quality of trades. So anyway, thank you all. I will see you all on Monday morning or Tuesday. We're off on Monday. I hope you study, look at YouTube, join the Discord room, study, 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 study. And at one point, one day, you're going to be at another level of trading, and you're going to understand it. You're going to take size. You'll be making 1,000 a day, 20,000 a month. Okay. Have a great time. And if you want to join us, boom, click here. 25 a day, 100 a week, 197 for the month. And we do credit back the week and the day back to you as well. Take care. And thank you. Bye bye.